Hi guys, welcome back. This is Traders2 again with you with the art of trading.net. I want to do another video for you guys about a trade that we did this week. I gave you guys the PDC video earlier about the trade we did in PDC. Now I'm going to do you another video that we did in a stock by the symbol of HUN, HUN. This is another stock. This is a stock that I've never ever traded before, but as you can see, the earlier video I did with PDC, that was the Holy Grail setup. A trade that I love to do a lot here. And like I said in the previous video, in many time frames, day trading as well as swing trading, Holy Grail patterns, Holy Grail setups, they work on pretty much any time frame as long as you know how to spot the pattern itself. And as you can see here, there's another trade that I love to do here, and this is one of my favorite patterns. I think is one of the most reliable patterns, in the trading world, and that's the bull flag pattern. And as you can see, guys, here, this is like just like any stock. I like to start off with. I always want to make sure. I always want to look at the stock and see how the stock is behaving on the daily chart and over a 6 month or a 9 month period. And as you can see here, this is over a 6 month chart of HUN. And as you can see, guys, the stock is in a beautiful, good, steady uptrend over the last few months. It got a little bit sloppy here, back in late February, early March, but that doesn't mean anything. What you want to pay attention to, guys, just like I said in the previous video, you always want to pay attention to volume. Volume is what moves stocks. Volume is what makes for me a pattern reliable or not. So for me, even though the stock was acting sloppy here, and it kind of acted sloppy over here too, for me, as long as volume is present, as long as there's big volume on the up days, maybe shallow volume on the pullback days, this is a stock that I am very, very interested in. Also another thing I like when I trade a stock, I like to see big candles. This is something I haven't really talked about before, but especially as a momentum trader, you always want to see big candles. Now, what do I mean by big candle? Because okay, first of all, big candles or several big candles in a row is an indication of momentum, is an indication of aggression in buyers. It could be either aggressive buyers or very, very strong short sellers who are covering their shorts. So either way, this is a stock that has momentum, and this is a stock that I like to participate in because of the aggression of the move. So a stock that moves aggressively higher or aggressively lower, this is the kind of stocks you want to be trading because trades like this often either work right away. So you always want to be in stocks that right away give you a signal whether you're right or not in your analysis or in your trading. You always want to be like get into. I always tell some of my subscribers the best trades are the trades that work right away. That you enter a trade, within a few minutes, if the trade starts to work in your favor, then you know that you've pretty much pinpointed a good entry and that you have a winner at your hand. Okay. So let's just get to it, guys. A bull flag. This is a pattern that I love to trade all the time. Now, where did I see a bull flag here? Okay, now first of all, let me just talk about real quick what I meant by big candles. Look at this, guys. This is what I meant by big candle. Look at this candle right here. Look at these several candles in a row. Big candles taking it higher. See that? Look at that. Here, another big candle right here. A nice big candle right here. Look at the huge one right here. See that? Nice several big candles in a row here. A big candle right here, and look at the volume, guys. This is exactly what you want to see. You want to see a big candle like this, and look at the volume. See that? And look at this, guys. Here's one more. This is the one that really caught my attention, was right here. This beautiful candle right here, and look at the volume, guys. Beautiful volume. So this means that there's aggressive buyers in the stock, um, as the stock is heading higher. So that shows you that the buyers are very aggressive in this name. And as you can see, guys, here, look at this. You had a beautiful breakout overnight. Look at this. You had a high here of 1899, let's say 19. It had a breakout here over 19. So it hit 1940. And guess what, guys? As I've been saying for the last few weeks to all my subscribers, be careful in a choppy market because choppy markets breakouts will often fail. And yet again, guys, look at that. We have another failed breakout. And I say failed in quotation marks here because the stock did not fail. The choppy market made it look like it failed, but it really did not fail. So personally, I would not have been a buyer of the stock here. I would not have bought it here, and I would not have alerted subscribers here at 19 on this candle. I would not have, just because I knew we're in a choppy market, and choppy market conditions, a breakout is not going to work right away. But keep the stock on the radar. I always tell people, just because the breakout doesn't work initially, that does not mean that this trade is busted. Keep the stock on your radar, because in a couple days it might pull back and it might give you, look at this, a bull flag. This is a beautiful bull flag pattern. The stock broke out on big volume, and look at this, guys. It pulled back on very short, on very low volume, several days in a row. But look at that. Even though it pulled back, it really did not give up much ground. It pulled back maybe like less than a dollar from the highs, maybe like 75 cents. Okay. Meanwhile, the market was kind of down, a few days in a row, but the stock, it pulled back in a very orderly fashion. And look at this. If you keep your eyes, nice and sharp and train your eyes to spot these kind of patterns, this is a bull flag. So right away, I put my alert, for my scanners, I put the alert to get into this trade over $19. So you can see, guys, here, this was the bull flag pattern here, over 19, and I would have liked to enter this trade. So this was the bull flag. If you look at the daily chart, the bull flag was kind of looking like this right here. So see that? This is the 10-minute chart, guys. Here's the daily. Look at this. This is the daily chart. On the 10-minute chart, the bull flag looked like this. See that? So I set my alert to alert, so that the scanners alert me once 19 is broken. Because look at this, guys. Look at this. See this level of resistance here? See that? So you had the bull flag on the daily, but look at this, guys. There was an area of resistance here at 19. See that? One, two, three areas of resistance at 19. So once the stock went above 19 here on this day right here, I got an alert from my scanner, said, hey, HUN over 19. So right away, now this stock take precedence over any other stock. Any stock that hits my scanner and that hits my alerts, my alert program, and alert me that, hey, this stock has broken over an area of resistance. Right away, this stock, I'm watching it closely now. And as you can see, guys, this is the 10-minute chart. Look what happened, guys. This is the 20 period moving average. Okay. And as you can see, the stock broke out over 19. And just like I've been saying, in a choppy market, stocks will tend to pull back after a breakout. So it broke out. But look at this, guys. It held the 20 period moving average. Now, this technically right here, a trader who saw this breakout here on a 10-minute chart, as the stock pulls back to test the rising 20 period moving average, this in itself can be you can place a trade right here and call it the holy grail trade. This is a holy grail pattern, guys. So I mean, this, if you could have entered the stock right here, put a stop loss maybe here underneath the daily lows, or maybe underneath here, maybe underneath this area of support right here. Maybe on a day trading basis, you could have entered the stock right here, put a stop loss here maybe, and then watch the stock as the trend resumed higher. Now, I did not enter the trade there. I waited, and I waited till the stock broke above this area of intraday resistance here. As you can see here, the intraday resistance on this day was 1916. The stock went and started to hover higher here, and it started to consolidate here around this 1920, 1916, 1915 area right here, guys. So this is where I entered the trade. This is where I sent the alert to my subscribers to buy HUN as a swing trade at 1920. So this is where we entered it, and we, in the chat room, called also in the chat room. And as you can see, guys, here we were entering it right here on this mini bull flag type pattern here. See that, guys? There's a beautiful little bull flag intraday. So we were buying it here on this bull flag at resistance in anticipation of a breakout. And indeed, guys, like I've been saying, for many years now, the best trades work right away. HUN literally gave you about 15 minutes to get into this trade at the alerted price at 1920. And as you can see, guys, boom, the stock started to work immediately. Now, right away, when I saw this, and I saw volume start to come into the stock right here, I knew that this was going to be a winner. So, I mean, I was feeling very confident in this swing trade, and I had no problems carrying the stock overnight because, chances of success was going to be very high in this one. And as you can see, guys, the stock the very next day, it wasted no time. It gapped up and started to run immediately. Look at that, right off the open. See that? So my target on this trade, we entered at 1920. My target was 20 bucks, but like I said, in a choppy market, you don't want to be too greedy. I sold my shares at 1970. So we entered at 1920. 1920 we entered right here, and then sold it at 1970, right around right here. You know, a lot of traders, you know, they kept it, they held it, you know, and you know, who knows, maybe Monday will be up. You know, but you know, as long as you raise your stop loss, a stop loss level I would raise it to would be around that 1960 area right here. So you want to raise anybody who's holding the stock still. Look at it. You still have a bull flag pattern here on a 10-minute chart. You have a beautiful bull flag pattern here. You want to raise a stop loss? That's fine. Raise it to 1960. So you lock in at least a 40-cent gain now. And as you can see, maybe Monday will gap up and run a bit more. Who knows? But for me, in a choppy market, I want to play defense. I don't mind stopping out. I don't mind stopping out at break-even trades. You know, if I have a winner in my hand, I want to quickly raise my stop to break even. You know, if I have a winner like this trade right here, I want to make sure that I'm booking these gains because there's nothing worse than seeing a gain disappear. You know, in a choppy market. I mean, there's nothing worse than that. It's the worst feeling in the world. And as you can see, guys, here, this is what it looks like on the daily. So we bought the bull flag. This is the bull flag pattern. So we bought it on a break above this day's, see this candle right here? We bought it on a break above that candle high, which is the break of the bull flag. And as you can see, guys, here the stock kept going higher. And look at this, guys, beautiful volume. So this stock definitely has some buyers in it. So I would not be surprised to see this stock head higher over the next few days. But like it, look at this beautiful volume, guys. And look at this MACD. Look how beautiful MACD is starting to expand and separate here. That shows that there's momentum, and the momentum is making the MACD, you know, spread apart, and that shows you that there's momentum in the name. As the MACD spreads, RSI is hitting 70, shows you that there's strength in this name. So for me, I think the stock heads higher. But like I said, you know, it's always better to book profits, you know, because you will never go broke booking profits, especially in a choppy market. You can't really be greedy. You know, you got to take the gains when you get them. You know, book 50 cents, 75 cents, a dollar, book it. And you know, these small gains, you know, over time, if you keep doing it, keep being consistent, you know, get rid of the get rid of the losing trades quickly, you know, and keep taking gains. And over the long run, you'll see that these small gains do add up, you know, to make in the long run, a bigger account and more confidence as a trader, and more disciplined trader. You know, when you're booking gains and you're raising stop losses, and you're being smart with how you allocate your money, you know, and you don't get sloppy with your position sizing. You know, stay disciplined. Don't think about the money. Don't think about profits. Don't think about losses. Just focus on finding good setups. Focus on good execution on the good setups, and then focus on good money management. You want to be consistent. You want to be disciplined in your trading. You want to be disciplined in how you enter, when you stop out, how you stop out, when you raise your stop losses. This is what makes a good trader, guys. Just all these small little things that you do and they all come together, and they make you a more complete, more confident trader. So just practice, practice, practice. All right, guys, I hope this helps, and we'll do more videos in the future for sure. Thanks a lot, guys, and thanks for listening to Trader Stewie here with the Art of Trading.net, and best of luck to your trading this week. Good luck.